Hi everyone, how's it going? Hi everyone.
Hey, I thought you can't make this time, son. Glad to see you.
No, I can. Last week I have a meeting, so I cannot join. But
Uh,
yeah, I can join every week. Don't worry.
Also, while Daniel hasn't joined, have you gotten a return offer yet from Amazon?
Not yet. But how
Okay,
about yeah? But you heard about the H1B visa, right? I
yeah,
think
okay, let's chat
something
on
could
this
change. Yeah,
separately because now I'm kind of worried about it, but I'll
yeah, me
reach out.
too. Hi Daniel.
Good afternoon. Can you see
Oh,
me? You cannot see me. You can't hear me
I cannot
either.
see you. I see another person.
Oh, you see. Excuse me. Yes. Yeah. Well, sorry. I'm getting set up. That's Tim. Um.
Is it on now?
Yeah. Owl doesn't move anymore.
What's going on?
Okay. I'm just trying to connect my screen, and then we'll get started. Okay. A quick request while we're waiting. For all tasks, can you make sure that they are linked on the intern dashboard? So every work stream should be noted on the intern dashboard, who's doing it, with a link to the whatever the working document is. Yes, a quick request. Okay. Nice. And I think we can get started now. I wanted to start today. So we're going to cover a few things. We're going to talk about deals. So I assume we've gotten pretty well done with deal screening. We're going to talk about lineage, and we're going to talk about Aphora. I'm going to skip around a bit, just for timing's sake. So if we can kick things off, let's start with deal screening. And I'd like Heaven to go first, just because you have less time, and so we'll start there.
Okay. Sounds good. Yeah.
Oh, actually, before you do that, I needed to make one announcement. The nature of being a financial institution means that people will try to find ways to steal money from the institution if they can. If you at any time receive a text message with any member of the firm's name on it asking you to do a task that hasn't been otherwise communicated via Slack or email, or a phone call from said partner, right, giving you full assurances that they are who they say they are, it is a phishing attempt. We had an attempt. It happens from time to time where they will, pretend to be Tim or Toby and ask you to do something which involves sending them money in some way or some shape. We will not ask you for money. We will not ask you for money. We will not ask you to purchase anything. And so if something like that does happen, or they ask, even if it's a request to do something, you can always double check you guys have my phone number. You could hit me up on Slack, or you can email me. Okay, I just wanted to give a heads up there before I forget about that. We will not ask for money. Now, I do encourage you to ask them for money. Right? If somebody's going to lose money, I'd rather them lose the money than you. Okay, Kevin, let's talk deals. If someone, or maybe I can do it. I'll pull up the deal.
Yep, sounds
The
great.
deal sheet and share that. But if you want to start talking about some of the companies you reviewed and your thoughts on them.
Oh, I thought I was gonna do the lineage market sizing first.
We will get to lineage. I want to
Okay.
start out with deals to make sure we don't that we
Yeah.
cover that while you're here.
Okay. Sounds good. Yeah. Just real quick, because I had a midterm this past Monday, so I spent a lot of time studying for the midterm. So I was gonna do a lot of the deal sourcing and screening today afternoon. But basically, yeah. So, but I did look at this one company though. 1 second. Let me pull it up real quick. Yeah, I looked at Vectra, which is like a AI driven like engineering drawing company. Like they basically generate engineering drawing. I thought it was an interesting company. And I wanted to ask about like when it comes to like fitting thesis, like how would you in like a 2 sentence summary describe what the fitting thesis company looks like?
Do they sell to other businesses?
Yes, they do. They are B2B.
Do you remember Vectra?
I
Vectra.
vaguely remember Vectra.
So this is Tim talking. Vectra is one that on the surface is incredibly interesting. And you, Kevin, you'd have no way to know this, but they've been sending the same email for the last 3 years about how close they are to like massive revenue. And like they're doing pilots and they're days away from signing a $10 million deal. And their round is closing any day now. And if you miss it, you're going to be an idiot forever. And we stopped engaging with them because they sent an email around saying that we were in diligence with them and planning on making an investment when we had only had a 30-minute intro call and had never followed up after that. And so we've stopped engaging, but are still on the email list because it's fun to see 3 years of the same exact message that is happening. So anyway, you're right that it is interesting. You're right to flag it as one that looked pretty good. It would fit our fund thesis, but no, it will not be doing anything there.
Got it. Okay. Appreciate for the insight.
So I would say on the screening side, right, like super simple. Do they sell to other businesses?
Right.
Yes. Are they based in the Southeast?
Yes.
Yes.
They're
Right.
they're literally in North Carolina. So
Yeah, and their software, right? So
Exactly.
fits thesis, it gets past like initial screen, and then there's the open question of like how good of a company it is. I think to your point, you didn't, let me see your notes. No unit economic breakdown. So what questions did you have? Barriers to entry, adoption. So most companies don't tend to include unit economic level data in their pitch decks. Sometimes they do, especially if they're well prepared. Unfortunately, oftentimes it's not included. So sometimes we can back into it with the data they've given. I think the bigger question is like, do you think it's a large market? Does the team, based on whatever background they state, give you confidence that it is the right team for this business? Right? And so it could be a highly technical team. So then I'd have the open question of like, well, how are they going to handle go-to-market? Right? Founders should be doing the initial, like driving initial sales. Hopefully they have sales, and if they do, that may speak to that. Or is it a co-founding pair where one is highly technical and one is more sales driven? But I think market and team will sort of get you a rough and dirty answer to the question around, is this an interesting business that could be interesting?
Interesting. Wait, to understand that a little bit better. So essentially looking at two things. One is on marketing and the other is on like their sorry, it's one on marketing and the other one is what again? Sorry.
So team,
Okay.
like team composition, team background,
Got it.
why they are relevant for this particular business.
That makes
And the other one, I'd call it go to market. So
Right.
it could be marketing, or it could be sales, right? Or it could be channel partnerships, but they have a very clear idea of how and who they are going to sell this to.
Right. And if they don't disclose their customer lifetime data, should we ask for it? Because I feel like that's like pretty important.
We can. I tend to only want to ask if we're really interested in it, because if it's probably going to be a no, but you start asking for data, they think you're interested, and then you got to let them down easily. Right? So if it's not interesting, or you think you're unlikely to be interested in it, I tend not to ask for further information. If I want further information, generally I'll just say let's hop on a call.
Got it. That makes sense.
Cool. Okay. We're gonna hold off on the rest of the companies until the end of the call now. Let's go to Lineage. Let's talk market size. I took a quick peek. So if you can just walk us through, maybe share your screen and walk us through your initial thoughts. And then I have some thoughts and feedback.
Yeah. Let me do that. Sorry, can you see my screen?
Yes, we can.
Okay, it's on the Lineage tab, right?
Yes.
So you can see this, right? Okay.
It's a little blurry, I think. Can you guys see the letters?
It's
Let me put on, before I say it's blurry, let me put my glasses on.
Blurry.
Okay.
Okay, I'm sorry. I'll just try my best to explain, like, and narrate.
Good now.
Yeah. So the way I did the bottom up was like I basically split, because last time I had a call with Daniel, and Daniel said, you don't have to care about like real estate sponsors. So like you don't have to care about like real estate like managers, like just care about the investment funds. So I basically only cared about the funds, and I divided them into three buckets: small funds, medium funds, and large funds. And then I pulled the total number of real estate investment funds through SEC. They have like this like statistics that says it's 4,249 funds in total. And then then I had another report that was on the number of small, medium, and large investment funds, as well as their like per month commission. And then ARPU is just calculated on the basis of their per month commission. So yeah, so that's and then the per month commission is just benchmark on like FundWave's portal. So like if you like go to FundWave, I don't know if you guys can see the screen here, but
Yes.
this is like a comparable product similar to Lineage that basically it's a platform that allows these real estate investment companies it's essentially a CRM for these real estate investment funds. There are three options. There's seed, growth, and enterprise. I think that matches pretty well to small, medium, and large size investment funds. So I benchmarked the small investment funds per month commission to 400, the seed version, because this one is like it's essentially like not that many employees on it. The growth one is like medium size because there's a lot more, and then for the large investment fund, there was an estimate because I asked them like what the custom. Basically, I emailed this platform to ask about what their custom pricing looks like, and their sales rep told me that usually it's a range in between. I think they said 25,000 to 50,000. So I just took 30,000 as a conservative assumption, and then times 12, that gives you the large fund ARPU, which is 360,000. And so at the end, what I did was basically like the revenue logic is pretty simple. Like the TAM logic is pretty simple. It's just the number of funds and what percentage of the number of funds are small times small fund ARPU annually, plus like medium total number of funds times median fund ARPU, plus large fund number times large fund ARPU. That gives the TAM. And then for SAM and SOM, I just based it off the assumptions here. Basically recycled these and just got the SAM and SOM. And then for the top down, it's I think either Toby did it or someone else, but essentially it was on like basically they calculated like the entire total like housing units, and then they broke it down to like single family homes, as well as like number of houses sold and single family houses sold, and that's how they benchmarked like the TAM. I did notice a very huge discrepancy between bottom up and top down. I think it's because I underestimated TAM by a lot. Like you can see these two numbers here. I definitely think that I could have included some other ways of calculating TAM that that could boost the numbers a little bit. I think 175 million as for TAM is a little bit too small, but I just don't know how exactly I can benchmark it better is kind of my question. I asked Daniel as well over the weekend. So yeah, that's my main point of confusion.
So my initial thought,
Yeah.
from a structural standpoint, what you did is correct.
Okay.
I think my feedback would be, one, the specific type of customer I think is incorrect. I think the customer for Lineage, and I know this goes against our B2B rule, the customer for Lineage is truly a real estate investor, but not necessarily a fund. It is a small,
Let me just throw one caveat on that, which is we get to the real estate investor, which is an individual, through a property management company. So if you look at, so the sale is to the property management company. The property management company gives us access to their investor that owns a home and lets us market and call directly to that person. So think of it as a B2B to C model, which is sell the property management company. They use the Lineage platform, right?
Mm-hmm.
And then they allow us to go unlock to activate
the investor.
The investor.
So I told Kevin to ignore the property manager
Okay.
for our exercise.
Yeah.
Daniel, please, could you tell Tim to just repeat it a little bit? One more
So
time.
are there real estate investment firms that buy up large swaths of houses? Yes. But Lineage is a platform. So there are houses that people put up for sale. There are houses that people buy one click. That is the platform. And then with that, they can buy additional services. You can get your loan through the platform. You can get your insurance through the platform. You can get your inspection through the platform, right? Each of these are like an add-on charge. Lineage makes its money being essentially a middleman. They are the broker. So they will take a flat fee from the platform, right? It's called a take rate. Now, I don't know that we have an exact percentage of what their take rate will be, but if you think about the general real estate agents, typically it's 3% for each agent. So 6% will go to the agents. Normally, when you have a software and your part of your value prop is saving each side money on the transaction, part of the savings will go to them, and then you will take part of the savings as your fee or your price. right? So instead of 6%, maybe it's 1.5%, 2%, or 3%. I don't have a good number on what that assumption should be. I'm guessing 1.5 to 2% is probably a nice conservative assumption. Yeah, so I think that's a safe assumption. But point being, the actual purchaser of the house is more likely to be somebody that owns 1 to 5 investment properties, but is like a single person doing that rather than an investment firm purchasing 100 homes at a time. This is Tim going out and seeing a house he likes on the platform and buying a single home, and maybe next quarter or the quarter after he'll buy a second one. Right. And so yes, there's a property manager in the middle of that may tell Tim, hey, you should come check this out. But I think for the purposes of our market size, focusing on the end customer will simplify it. So with that said, there's not a lot of data, right? You're not going to find like SEC data on the number of real estate investors. And even when it comes to firms, there's a lot of firms that aren't counted in the data that you pulled, right? Which is why it's so low.
So. Yeah,
So
exactly.
I actually think that top down you see is probably a more useful starting point for the bottoms up analysis, right?
Exactly, yeah. Because
Thinking
looking at total amount of homes purchased, that, and then starting from there.
total number of new homes, right? Because their go-to-market is sort of partnering with new construction. So looking at, so from like, where can you find the data, right? There's going to be census data on the number of homes, the number of single family homes, maybe the number of new homes. There's going to be FRED, Federal Reserve of St. Louis data on new starts, new construction starts, or new home starts. There may be decent data there. And then there's going to be some data from the National Realtors Association or whatever that talks about the number of new homes built per year, the average price of those homes, and some other things. Normally that's monthly data, so you'll have to sort of take the last 12 months worth of data and put it together. I think that's probably the best place to start. So in my mind, if you know the number of new single family homes built each year, right? You can either find sold or built. Sold is more accurate, but you probably have better data around built. Right? Think about the average price point for those homes. When I did a quick cursory search, it was around 400K. Right? So let's say, 5, 6, 7 million new homes a year, 400,000 a pop, and our take rate is 2%. That's like a quick and dirty TAM. Right? Now, can we get more granular? 100% we can. But thinking like high level, that's sort of how I think about the TAM initially. So then you'd say, well, how do we think about SAM? What is that next level? I'm thinking, because we know they want to partner with new home builders, and they want to get these homes on the platform in hundreds at a time, right? So these are people building subdivisions. I'd think about who are the top home builders in the U.S. and how many, like what percentage of the market of new homes are their homes, right? So if it's, if somebody's doing 10% or 20% or 30% of the market, that's highly relevant. And maybe thinking about the top 10, or maybe it's only the top 5. I don't know what the numbers shake out to be. But maybe that's how you sort of triangulate around what that SAM should be. And then as I think about the SOM, then it starts to be, where have they been focused to date? And I don't actually know the answer to this question, right? But on the platform currently, is it nationwide or is it regional, right? It's a Southeastern company. So if all of their early properties are going to be based in the Southeast and they have a regional tint to the market, that's your SOM right? So the new homes are these builders in these states are going to be their initial product inventory of sorts. Does that make sense?
That makes so much sense. Wait, I have a quick question just before I go. It's just like I'm very impressed by like the way you think, like the framework. Like, how did you build this type of like framework? Because when I was like originally doing the market sizing, I felt a bit lost.
I mean,
So
normally I let the data drive. So there's an open question to how big the market is, but I think second to that is like what data is available to you. And so as you're looking, you're going to go down paths where you think this may be a really interesting path, but there's no, like to your point, there's no data available on the number of real estate investors in the US,
exactly.
right? You're just not going to find it. Versus you found like big firms that are, and even the smaller ones I consider big, that's like highly relevant to a specific area. We just aren't going to find data on real estate investors. So what could be a proxy for the number of homes that are bought by these people? Right. I think one of the stats I found, and it was literally a quick one I found earlier, was like 80, and I don't know if it's accurate, 85% of new homes in the US are actually bought as investments, not as like homes that people are going to live in. Right. And so like that led me down a whole different line of thinking than sort of this other path. Did I end up going that way? No, partially because I wasn't sure I trusted the data that I was getting. But a lot of times it is like, what data do I have? What story is the entrepreneur sharing? And like, how do you make those connect?
And then one other quick question on research, just following up on echoing the point you said on what data I have, because a lot of time there are like some sketchy sources that like they're kind of like opinions or like news or whatever, how they brand it, but it's like articles online that they just publish random facts. And sometimes when you're doing research, that's the only available data source. And sometimes there's like diverging opinions. Like some say it's 30%, some say it's 10%, some say it's like 70%. Everyone has their own take. And then so how will you go about thinking about what source to pick usually? Besides, if there isn't like a SEC type of like more authoritative source.
No, I think you're right. So I tend to lean on the authoritative sources, right? So I mentioned a few earlier. Consulting firms tend to have pretty good data. Industry firms, but then there are some areas where you can't really find clear numbers. Sometimes they have like industry surveys, which get you really sort of not direct answers to your questions, but sort of adjacent, that talk about what percentage of the industry is actively looking to buy a new home or build new homes, or I don't know, there's all sorts of things. But I'd say those may come from like places that I would not necessarily consider reputable, because I've never heard of the New Home Association of North America for whoever, but they actually have a ton of experience in that. And it may not be like great macro data, but it's enough to point you in the right direction of this is how this particular group of people are thinking about it, or this is their uptake of a particular technology, or this is how much of their budget they're spending somewhere, and then that can be useful.
Gotcha. Okay, that was very, very helpful. I'll think about these things while I'm doing further research.
Cool. I'd say let's connect later this week on this.
Yes. Yeah.
Cool.
Okay. Yeah, I'll text you on Slack, and it was good seeing everyone. Yeah, thank you for your time. See you guys.
Good. I'd say let's keep going with lineage. So competition and exit opportunities.
I can start with competition. I looked at transaction.
Can you, if you have it on, is it linked to the dashboard already? I should check. If so, we can
No.
throw it on the screen.
No, but I can pull it up. It's in the same like lineage.
Yeah. Okay.
Should I pull it up, Daniel?
Yes, please.
Okay, I'm trying to find. Do you remember which folder it was in? Vetting Cree, right?
If you search lineage if it's in the diligence folder, the diligence like spreadsheet, if you search
Yeah.
lineage or diligence, I think you have to go to diligence again.
I found it. Okay. Sorry, 1 second. So I looked at some competitors, and I added it in this list. A couple were already in there. One big one that I wanted to point out was Fundrise, that I thought is like a direct competitor of Lineage.
Okay, so is Fundrise a marketplace?
It's not directly a marketplace, but it is sort of a platform, which I thought was similar to Lineage. So they don't, I don't think it's directly investing in homes that Lineage does, but it's investing in like real estates and like in REITs and other real estate assets. And Fundrise also helps with like private credit, so like private equity investing. So real estate is just one arm of Fundrise.
Yeah, so I know Fundrise more from their obviously private market stuff, but they
Okay.
have a VC platform that lets everyday people invest their money in venture capital firms.
Yes.
Okay, so I don't know that I would see them as competitive
Okay.
because I would throw this more as competition to a Robinhood or any platform that lets you invest in REITs or
Okay.
even stocks and bonds. Like I would throw that more in that basket. You wouldn't be able to buy a whole asset just for yourself.
Yeah. That's a good point because when I did research, I don't think I see any other companies that directly like let you buy real estate platforms. Like at least on transaction, on like a quick Google search, like it's more like REITs and like getting equity in other real estate platforms than just like buying the whole asset itself, like the whole house itself.
Got it. Did you come across any platforms that allowed you to purchase a percentage of a home?
Yes, that was Arrived.
Right. Okay. So I would say that would probably be that type of company would be the closest to what Lineage is doing, in my opinion. There could be others that are doing the click and buy now. Another one that I don't think is on your list, Open Door. The big public company that went public via SPAC with Chamath. So Open Door got into a lot of we'll call it financial trouble a few years ago because so think of them as a competitor to Redfin or Zillow, right? They have a map, they show what homes you can buy or sell. And what they started doing was they said, we have so much data on all of these homes that we can approach the buyer, the seller, and say, hey, we'll buy this house now for this price, take it or leave it, right? And then we'll go to the seller knowing how much the house is worth and say, hey, you can buy this from us for this price and we'll make money on the spread. And it works. They grew very fast. And then what they realized was happening was people were only selling them their bad homes. they weren't selling the good homes to them.
Right.
And at the end of the day, they ended up trying to get out of the business and selling many of the homes back to the people they bought them from for less than they bought them for.
I think, Daniel, my question to you for that is the way I was looking at Lineage is when people want to invest in real estate and not just buy one home, one house and live in it. So when I think of like Zillow and Open Door, it's like a family looking to buy their family house or like a couple looking to buy a house that they want to live in. But when I think of Lineage, it's when I want to actually invest in real estate. So it's not really the house I'm looking at. I might make it an Airbnb or it might just, I might rent it out, but I have more than one like real estate property, which is also what you touched upon earlier. So that's why I was trying to focus on companies that are more catered to investors than just home buyers.
Got
But
it.
if
More
you think,
platforms.
yeah, if you think we should look at home buyers too, then I'll do the analysis again because currently I'm not looking at companies that like Zillow and Open Door that are catered towards like people just buying one or two houses.
I think the key thing is probably when I think of the asset, a full home, like as a unit, is probably more important
Okay.
than the type of buyer. The type of buyer is also critical, right? Because Lineage will not sell to me as I'm looking for a new. I mean, I'm not
Correct.
saying they won't, but they're not trying to find me, right? It's a
Correct.
but I think the fact that you are able to buy a full house on a platform without taking, weeks or months is sort of a very key value prop. And in fact, I'd argue for Lineage, that's their core value prop at the moment. So I think anything that is competitive in that lane immediately becomes somebody that we should be watching and trying to better understand. The other point for why I mentioned Open Door specifically is they've been through a lot of tumult. Recently, like last week, they just hired a new CEO. Where is he? He's coming from, I don't remember. He was the COO of a really good company. I can't remember the name of it right now. But point being, he's announced that this is a space that they're looking to enter. And traditionally, they've been more selling large blocks of homes to institutions. But depending on how the unit economics play out, if that's not as profitable, you could very easily see them starting to nudge into the space where Lineage is, because they already have so much. They already have so much volume of people looking for homes. Some of them being real estate investment properties on their platform. It's an easy shift, and they sort of already have the tech to do it.
Makes sense. Yeah. I think I was more focused on the investment side of it, like the investor side of it, than just home buying. But this makes it very clear. I think if that's our focus, I left out a lot of companies, so I'll just do a refresh on it.
I would say so. The other thing I'd consider is the ancillary services I mentioned. So if you look in the Lineage folder, there is a 5-year revenue projection.
Yes.
And they show marketing, the marketplace, but then they also show insurance and they show lending and some other stuff. I'd say if there are any companies that are partnering with the competitors to do lending, to do insurance, to do any of the ancillary services, it may be nice to just include those as not as this is a competition to you, but this is who X is working with. This is how things are structured in their partnership or whatever. Whatever data you can find, that's secondary, I'd say.
Okay, sounds good.
Cool. And then exit opportunities. Let's talk that really quickly.
Vanchika, please, can you just help me share?
You want me to share?
Yeah.
Yeah, of course.
And just go to the tab, yeah. It's kind of blur.
So, okay, let me ask you this way. Who is the most likely buyer of this business?
So the way I categorize it is, so you have like prop tech management platforms like Zillow and PE firms or like institutional investors like BlackRock.
Yeah.
So the first would be like prop tech, then followed by institutional investors like BlackRock, before you think about firms like PE firms like Thomas Bravo and the like.
So I'd say for this analysis, we don't need to include the PE firms. Anytime any of our companies go to market,
Okay.
the bankers are going to touch on the PE firms, and you're sort of you end up talking to them anyways. They're always in the game. I
Okay.
think the thought process here is to focus on the corporate for two reasons. One, there are sort of ancillary opportunities. There could be partnerships. They could be a like a sales channel or a reseller for you, right? You could partner on different ways of interacting with the property managers or with the home builders, right? Like there's a lot of other stuff that goes into it, and you're sort of building the relationship for much later when they could become an acquirer. The second thing, though, probably more important, is from an exit standpoint, strategics are more willing to spend money. They are less revenue sensitive and more, and right, they're making their decisions from a strategic value standpoint, right? So maybe they want the technology so it doesn't get in the hands of their competitor. They may pay you far more than the typical revenue multiple for that, right?
Yeah.
Defensive play. Maybe they want your team to sort of lead their innovation and help their growth going forward. They will pay up for you then, right? Maybe they just literally just want to beat the competitor and don't have to have you, right? Like there's a lot of reasons why strategics will pay more and focus less on here's what your revenue is, here's what your metrics are, but more so, this is what it means to our ecosystem for us to have you instead of one of our competitors. Examples of that from co-founders companies, I'd argue, oh no, where my thoughts going? Companies who have been biospatial, they had really granular healthcare data. Revenue wasn't the highest, and revenue was a bit slow, but they got above average multiples for their business simply because another company wanted the data and they didn't want their competitors to have the data. Right? Who else? I'd argue not quite the same, but Element. When Element was bought by a PE firm. But part of the reason their valuation was so high was that it could be used as a platform to then bolt on other companies to it. So revenue mattered, but they were willing to pay up because of other factors related to the business. They were willing to pay up because the CEO was a higher caliber than the PE firm would have been able to put in place themselves.
I had a question.
Yes.
So like when these strategics are trying to acquire a company like Lineage, and since Lineage, like one of the I would say the value proposition is the recurring revenue piece, wouldn't they just bank on that to value the exit, or like to value Lineage at that point in time?
So I'd say two things. Lineage is not recurring in the nature that normal SaaS is. Since it's a marketplace, right? They take a fee. So generally, their revenue, their top line is called GMV, gross merchandise value, and then their take rate of like 2% or 1.5% or whatever, right? The combination of that sort of gets you your net revenue, right? That's their revenue basically. One. So there's not a recurring factor. There may be reoccurring customer,
reoccurring, yes.
right? But you're not paying a monthly SaaS fee like most of the software we work with. Two, wouldn't they value it based on that? I'd say investment firms will. So the PE firms and the growth equity firms, 100% will. But the strategic, often there's other things at play that make them want to buy an asset oftentimes. And those strategic decisions on their part may override any of the financial metrics they would normally consider to make their decision. So if the CEO says, hey, we need to have a software platform and we need a marketplace, I don't care that generally we're paying 7x for businesses. If this is the best one, or if it's the only one available, I'll pay 11x to make sure we have it and it doesn't go to our competitor.
Okay, yeah, that makes sense.
Okay.
So I have one more question.
Yeah.
So when, let's say, before you sign a term sheet with the Lineage team, like how do you have this conversation around exit opportunities? Like, what kind of conversations do you have with these founders in terms of exit opportunities?
Yeah, good question. Two things are really important. One, aligned on the goal. So often if you start sitting on calls with us, like Toby will often ask towards the end, like, what's your goal with this business? And some people say, I want to have a really big business and I want to, make this the biggest thing in the world. And so he's like, what revenue are you targeting? And they say 7 million, right? Like 7 million is great. A $7 million business is not going to get the type of exit that makes Tim happy.
Yes.
Right? And so that sort of shows that we would not be aligned with the founder if his or her goal is a $7 million business in 5 to 10 years. Right? So what are they aiming for? The other part of it is, what can we enter at? So valuation certainly matters. Oftentimes we're entering underneath 10 million pre, which means we may end up owning 10% of the business, 15% of the business, sometimes 20% of the business, right? So like back of the napkin math, if in order to make an investment, we, right, as a team have to justify that this can be a $50 million outcome for the firm, that we can return the fund, right? And let's say we own 10% of the business at exit. What do we have to, what does the exit value have to be in order for us to get there? Anyone can answer that one.
Could you repeat the question?
So let's say we need to return $50 million to the fund. We need to return the fund with this investment. We own 10% of the business. How large does the business need to be in order for us to return the fund?
500
million exits.
That's right. That's right. So, right. And so if the founder says, I just want to get to 7 million and exit, there's no way, right? It's a $500 million business.
Yeah.
Right. It's different if he's shooting for $100 million. Because then the next question is, well, how are you going to do that? Right. And there should be, obviously there's a plan in place on how to get there and so on and so forth. But that's where but if we come in and we own 20%, right? We don't need 500 million. 250 works just fine. We still return the fund.
Yeah.
So I'd say those are the two of the levers you're considering as you're thinking about what the exit needs to be or what that could be.
Okay.
Now, sometimes the market isn't big enough to justify that sort of exit. So earlier, Kevin said the market was 173 million, I think. Like that was this like the size, right? And like, great, but if that's the full market and we need 250 or 500 to get a win here, market's too small.
Yeah.
Okay. I want to quickly move to Aphora. That's okay. Can we just like, what are your takeaways from the conversation with Daniel West? And are you in a good position with the go forward plan to execute on some of the things he wanted?
Yeah, hi. After the conversation with Daniel, I think his focus in this stage is like about the go-to-market plan. Definitely, he's kind of confident in his lower price comparing to other competitors. So he just, I believe that he's focused more on like how to reach out to the brokers and how to make a deal with them. So that's what I learned from the conversation. So that's why my focus is trying to list out all of the brokers and how to contact with them. So that's what I'm focusing now. In For to give the memo to Daniel, I and we separate our memo into the two parts. The first one is like industry analyst and competitive niche analyst, and the second one I show the list of target brokers, and in which I have compiled more than 20 brokers, and I intend to send him in this week to get his feedback. That is a progress of the Upfront projects.
Nice. No, I think that's the right track. Certainly, and I'd ask him for as much feedback as possible if the granularity of the data you're providing is good for him, or if he feels otherwise. Yeah, I think that's wonderful. After speaking to him, that you feel like you have a good understanding of how their business works and sort of how that ecosystem is. It's more complicated than most that we look at.
Yeah, I think it's more complicated, but his focus now is more on brokers. Is the main like go to market plan. So that's why I focus on it only at this stage. I really want to get his feedback because I really want to understand whether we are on the right track.
Got it. That makes sense.
And we intend to finish this task, maybe the first draft of a memo in this week, and to send him in this week.
If possible, that's the goal. And I'd say generally, I know classes are busy and we're getting towards its midterm season. Do your best not to do work on the weekends. That should be your time. So if possible, I would advise, before the weekend, optimal, so you can have the weekend for yourself and to study and other things.
Thank you.
Let me.
Yeah. This week I have a conference from Thursday until Sunday, so I will not be able to join other meeting. But during that time, I will try to make some screening, company screening. So I will update into 5.
Understood.
Yes,
Yeah.
same here. I have that same conference. We're traveling to Houston, and I will be back on Sunday nights.
Got it. That's okay. I'd say just make sure you communicate with your teammates, that they know you're away, and if there's something you need them to do while you're away, just make sure you are explicitly asking that. The other thing, was anybody else able to finish their companies for the screening? Not yet. Okay.
I got through about 9 of them. I didn't know exactly how we were splitting them up evenly. None of them fit the thesis except one, and that one we already talked about kind of didn't flow through to making it to a meeting.
Got it. So I would aim to 100% have these knocked out next week, because we have to tell them, no, we're not going to move forward with them, or we need to set up meetings with them. And I want to do that so that you guys can join the meetings for the ones that we choose to go forward. And we got a whole nother list of companies. There's there's a bunch more companies, right? So I'd say let's knock these out. I don't think it should take that long. If you split it up evenly, I put it that way. I guess if Giancarlo ends up doing all of them, that may be a grind.
Yeah, I started one already. It's like my agent connects, but I'm not yet done. And I think it kind of fits the thesis, but I need to just get more points to back it up. So by next week, I think I'll be done with that and so many others.
Cool. So for the ones that we decide do fit, we're like immediately setting up meetings with them, and we're gonna have you guys join. And there we have like literally there's like 100 or 200 more companies to run through. So we're just getting a taste, but like the more we do, the easier it'll get and the quicker it'll go. And you'll start to get the hang of what flavor we like versus what probably won't have a high likelihood of getting through, the investment committee. Okay. Any other questions on what we discussed today, or sort of go forward plans, or preventing phishing? Happy to answer anything.
I just wanted to mention that the ad hoc request I had for Luma, I had done it and like replied to the email. So I just wanted to put it on radar.
So I was gonna double check. It looked good, but I was just gonna check cell for cell. Luma is the most complicated financials we get. Everything else should be more simple.
Yeah, that's why it took some time. And I think the numbers make sense because they're just only slightly higher than what was already on the spreadsheet. So it doesn't look like too wrong. But yeah, if you or Tim or whoever could just like take a look and let me know, just so that I can also learn for the next time. But yeah, it's completed basically.
Will do. Thank you.
When you mean Luma, is it like the events scheduling platform?
Grocery marketing technology? Luma project?
Okay.
Oh, no, not the events platform. That's
okay. I was like.
Okay. Anything else? Then we're good. Okay.
Thank you.
I'm available towards the end of the week if you need anything. So happy to set up meetings, happy to communicate on Slack. Just, I'd say, over communicate. If you have questions, feel free to ask. Happy to help.
Thank you once more for like hosting us last week, myself and Giancarlo, and for the food also.
Yeah.
Yeah.
Yeah, you guys are hobnobbing with rich people, right? So actually on that, we need to thank Samuel and Giancarlo. They helped us raise like $10 million that night. So we are 10-ish% or 20% of the way, 60 to 20%, depending on how much we end up raising. But right, $50 to $60 million goal. I think we're at 11 million technically, 11 or 12 million. So that's one meeting.
That's good.
So great job.
Yeah, it was well executed. Like I get to tell people that I went to Briar Creek Country Club.
Yeah, so we'll be having a few more. Yeah, thank you for coming. You guys did a good job.
Yeah, thank you.
Thank you so much for having us.
Yeah, see you next week.
Yeah, see you. Bye-bye.
See you guys.